Hello and
Hello and
welcome to
welcome.
Wyckoff.
So this slide is a continuation with previous video, wherein we have discussed about this trading situation, which is frequent in nature, and you will find it very often, wherein demand is in control. There is a pullback with efforts to take the market down. Previous resistance got converted into support. Testing, no supply, again testing and testing, and price resolving, and then continuation of price in upward direction. So this is a very common trading setup which you'll find. This can happen. Uh, Look for this kind of trading situation wherein if you're playing around with structure or either SMC or either ICT concepts or either moving averages, either RSI, MACD, convergence and divergence. So this can gel with any kind of strategy which you are using. So having said that, let's go to the second situation. Uh, this one is for long or buy situation, and this one is for selling and short selling situation. So I'll walk you through this one. This was a climatic behavior. Uh, for those who are for those students or those traders who are watching this video who don't know what is buying climax or selling climax or stopping volume, these are all Wyckoffian concepts. So please uh, bear with me if you don't understand this one. Climatic behavior is something which is, or stopping volume is something which is, uh, you can call it as cessation of price when either if we are making higher progress or if either we are making lower progress, then if we are in an uptrend or if we are in a downtrend. So that is a cessation of price. You can see a climatic behavior, climatic bar. Out of nowhere, you will see a widespread, ultra widespread bar. Uh, Close matters, but many a times I have seen close not going in accordance with the buying climax or selling climax bar, but still the market changes its direction. So for your understanding, you can keep it as it is. Like if price is ultra wide bar, uh, and after that there is no progression of price or breaking prices, not breaking high, and prices getting contained within a zone or within a range, and every time the effort is or price tries to either reach or break this resistance which is formed on this particular buying climatic bar or buying climax bar or candle, price fails, and that results in fast and high momentum price fall. So in this given example, demanding is getting weak every time price reaches the top, or this is the Z top, this is the second top which has been made uh, while testing this buying climatic bar, and then after that you can see the price is showing high momentum. By high momentum, widespread bars are normally referred to as high momentum bars, but it doesn't resolve in further price progression. The reason being said is like they are actually trapping the sellers because when buying is coming into the market, so if the institutions or composite operator or institutional buyers or sellers, they want to step into selling, what they will do, they will speculate the price to the higher prices or higher levels, showing a retail trader to get into the buying side, and they absorb all the buying, and then price starts falling. So it's quite difficult to understand, but once you know the concept and you have live market observation sessions, then you'll come to know about this one. So having said that, this is a situation you can say this is an accumulation, a distribution taking place. That this, there is one point which I want to make clear to everyone is that the people who are following the schematic, this is a lesson to learn wherein not every schematic will turn out like normally the people who are acquainted with Wyckoffian method, if you are looking out for a schematic of distribution, there has to be a U-tag or upthrust after distribution, but it is not taking place over here. So that is not the case. That's the reason why schematic is very difficult. Nowadays it is very difficult to, it's not that much practical to find it on live chart. Though the concept can be understood, distribution is something wherein there is exchange of hand between buyers and sellers. To be precise, demand is exchanging hand with new sellers or new supply. Uh, First of all, demand is getting vivided by supply, and fresh supply is coming into the market. That is resulting in a markdown. That is a downtrend. So it's a concept as a whole. It's not like something which you can like follow exactly how you will get a schematic. Though sometimes it does, sometimes it doesn't. But many a times it is very difficult to identify. If you go with the phase analysis of A, B, C, and D. So having said that, this is a support now being tested. Now, this kind of a bar, if a person is trading intraday and if he has drawn as this support, so there are high chances a person will feel or trader will feel that we are going to see higher prices. This is mainly because of the gap which is taking place. So this kind of bar normally results in change of you can say sellers are or traders are getting confused and they are planning for a buy trade. Though if you observe at this particular candle or bar, there is a blue triangle with green candle. That means there is demand and supply imbalance taking place at this particular point. That is the reason we have seen this kind of price behavior at this particular price zone. So having said that, there was a failure, 1, 2, 3. So there is lot of effort but no result. So here you can see effort versus result as well as cause versus. So effort versus result, cause and effect that led to price breakdown. Many times it happens, price will come back and test this particular breakdown level. But what I like to see is a pullback, that too in a swing form. So if I see swing taking place at this particular price level, then I would always look for a no demand kind of a bar formation, or a no demand followed by a top reversal kind of a bar for initiation my sell short trade. So if you go with this example, supply with price down expansion, then strong supply after the breakdown, which shows continuation to the downside. After that, you can see effort versus result bar, which was engulfed by sell, or you can say supply is in control, supply is greater than demand. Strong supply followed by effort to take the market upwards with no demand. And then if you watch closely through this bar, it has eaten all the demand which was created within this region. So this is a very good spot to initiate a sell trade. That's the reason I have marked it as a sell or short on this particular bar. So what is there in it for us? First, we have effort versus result kind of a failure. Lot of effort to take the market upwards, but no result. Then we have another effort, though it resulted in an imbalance. Again, price tried to hold above the support level, but it failed. And if you go bar by bar, support getting converted into resistance, then a continuous strong supply with an upthrust. If you are familiar with Wyckoffian method, then you will be understanding what is upthrust. So this is an upthrust, a local, whatever you want to name it as, hidden or local or whatever. Upthrust is an upthrust, but it has to come into play after a significant supply, or in a downtrend, or after a failure of demand. If you see a upthrust with supply as evident, like in this case, then you can initiate this trade. So these are examples which I've shared in my PDF. There are many more things which we can incorporate into this PDF, but it will make it much more complex. So that's the reason I'm recording this video. So now we'll come back to the live chat, and then we'll discuss what are the other things which we can use this trade reading toolkit with. So this is the pricing, how to purchase. $25 per month subscription. For inquiry, this is my name and my WhatsApp number, Telegram ID. We accept international payment through PayPal and local payment through Visa or any local digital payment platforms. So I'll take you back to the live chat. So let me know in the comment if you, because English is not my native language. I'm from India. So if there are certain Indian students or Indian traders who want to take me this session in Hindi, then I'll do it for them. So this is the Euro USD chart on under 5 minutes time frame. You can switch any time frame, that will not matter as long as you know how to use these tools. Like for example, I'll just walk you through on this portion of price action so that you have an understanding of how I use this trading tool for trading any intraday positional or short term or any kind of trading situation. So for example, selling was there. This is situation one, you can say, or trade setup one. Selling, pause, or you can say price was knocked to the sideways. Then we had a continuation to the downwards. Again, we have this is trading situation two, wherein there is no hollow. There is one green candle, which signifies demand is in control, or demand is greater than supply, or you can consider it as a initial demand which is coming into the market. If you compare it the structure, if you draw the structure over here, so then there is no effort, or like supply is getting weaker because this is weak supply. Hollow candles with red triangles or are always referred to weak supply. Then there is effort to go down, but again it was resolved by demand, a weak demand. And if you look carefully, I think we had a spring over here. Once again, let me draw this line so that we all will be in a position to understand it correctly. Sometimes it is very difficult to draw a line while recording the video. So this is a resistance area. Sorry, my bad. This is a support area. Previous support area. As price is coming down, we are losing force. Demand and supply can be like, you can compare them as, or you can not compare, but you can call them as forces which are driving the market, if or which are driving the prices either upwards or downwards. So if we see this supply, and all of a sudden supply is getting exhausted. What does that mean? Like, this was the area where initial demand was uh, like, you can say, demand fatigue took control of the prices and price went upwards. So as we are approaching at this particular point, there is some residual supply demand or some kind of profit booking taking place over here. The shorts which were entered the market, they are booking the profits. And after that, as usual, we were like, previous support was held, and we had a first spring occurred at this particular point, I guess. Then this can be, if these levels are the same, this is a spring, or either this is a spring and this is the test of the spring, heavy volume test. So if this is the case, then we are expecting price to at least hold above this level. If that doesn't happen, then we can see price coming downwards and breaking this level. So one second, just give me a minute. Let me set the scale. But I'm only getting 2 digits, 2 decimal points. Okay, now it's fine. So this is demand zone created. So now, what I'll do, this is just an overview or a small training sessions which I'm taking. If you have any doubts, watch them as frequent as you can, and then please ask me the questions pertaining to these tools, because it's more than a indicator, it's more than a tool. Because someone asked me from one of our members or one of my students, sir, do we have to apply volume? This representation is a computation of formula which is based on price action volume. Volume is used as a force to determine the force. Force means demand and supply. Price action is what we are seeing or on the graphical representation of price. So please ask me if you have any questions. So now what I'll do, I'll start applying all these things to the indicators which are most commonly used, or which are methods which are commonly used, or strategies which are commonly used. Not the method, but strategies. Okay. So first of all, I'll show you the setting which you all have to do. If you're using it on candlestick, so it's a mistake like this. Okay, this is what the setting should be. 50%, I guess. The reason I'm doing it in recording, so there won't be any confusion how to set up the chart, because your chart should be your first priority while setting up anything. Before application, your chart should be clean and tidy. So now this is in play. Now, before we begin, I'll apply each and every indicator one by one. Well, we'll start with ICT concepts. So my question to like the people who are using ICT concepts, you know what your strategy is all about. I'll not get into what is a buying or selling kind of strategy, or where you will buy, how you will buy, and when you will buy, and what will make you buy. I believe you know what's your game plan is. But for this particular session, my question to you is simple. Do you know what is happening inside every candle? If you follow candlestick, if you follow red and green candles, then that would add some understanding to you. Like if red candle is there, that means somebody says, like many people say sellers are in control, and if green candle, buyers are in control. But that is not the case. Can you say, or can this is my question to each and every person who is watching this particular video. What is I'll take a pause, and so that I'll record this session differently. Just give me a minute. So we'll begin with ICT concepts. So my question was simple to each and every person who is watching this video. What is happening inside each candle? Because for me, a candle or a bar, whatever you call it, whatever you use, like it's your personal comfort zone with whether you want to use candlestick or bars. For me, I use bars because they are much more uh, logical for me as compared to candlestick. So whatever your preference is or whatever you use it, like it doesn't matter which time frame you're using, either 1 minute, I'll switch to candles, or 15 minutes, or 1 hour, or 4 hour, daily, weekly, monthly, doesn't matter. So this is a price for me, either 5 minute or 1 month. It's just a graphical depiction of price which has like you can say either demand or supply and the price appreciated or depreciated within this 5 minutes or either within this entire 1 month. So what has exactly happened, what led me to come up with this solution is that based on demand and supply, you cannot, if this candle is red or green, you can say, I'll make it once again, I'll turn the color back to green and red so that so if this is red, that means demand. If this is red, if that is what is meant demand, then why the price is falling? You're getting the point. So what exactly is happening over here? Before going to ICT concepts, I want each and every one of you to ask this question to yourself: what is happening exactly over here? Though by the like distance that or range of the candle or range of the bar, you can get some to some degree you can get the idea whether what is happening at that particular at this particular price level. But what is does the price has or demand has that much control to take the price higher, or does the supply has that much control to take the price lower, or is the institutional sellers or buyers a composite operator or whatever you want to name them, or smart money, those people have their interest to take the market upwards or downwards? Or these are the questions you should be asking randomly and constantly to yourself. Okay, no problem. If you're using any indicators like RSI, MACD, they are good and they are fruitful till some extent because unlike any other indicator, everything is lagging. Only price is leading. That too, if you know how to use it. In some degree, price is also lagging because lag means which has happened and which has happened in the past and you are able to see it in present. So this would be a confusing statement, but you'll come to know once you are associated with me what I mean really. So ICT concept, if anyone is using this ICT concepts, like for example, what I can make out of this one is a test and supply and a test and a buy. For me, this is structure and this is I think or what kind of thing or break of structure. BOS means break of structure. This one is break of structure. Now we had a break of structure, but price failed to contain above this one. So we had a fall, and after that, these are the things which I understand. But if I apply the toolkit to it, here once again I'll somebody asked me, somebody told me, sir, you are promoting your products and all this stuff. It's not promoting. I don't know. I don't need any promotion. This is what I have observed, improvise, like I've learned, adapt, and improvised, and I want to add value to the traders. So first, first and foremost, there is value for everything, time, effort, and everything. And second thing, it is a value addition for you to trade and increase your chances, decrease your chances in losing the trade, minimize your stop loss, minimize your loss. Let profit take care of itself. That will eventually increase your profits. So this is a contribution from my side to Wyckoffian fraternity. So having said that, if I add now, does it make any sense to everyone? This was break of structure failure. Then if this is a breakdown, then it has to prove itself. If I zoom into this particular portion, I know this is price is falling because supply is in control. But that is the reason I'm recording this video in live market, because many people what they feel, sir, you everyone is recording in a like when market is not like market is as closed and you are recording your videos. That doesn't make any sense. I want everyone to understand this thing. This thing works in live market, and it works like anything. So if, for example, coming back to a point, if this is MSS means you, I don't know what exactly does this mean, or I have forgotten. If this is the demand, then we have weak demand. That means if this is support or this was support, if this has to get converted into resistance, there has to be weak demand acting at resistance, which was support earlier. So that adds weightage to our case that prices are going to go downwards. That is the reason we have weak supply. But if you watch carefully, the range of this entire candle or a bar, if you use bar, that will not make any difference. I'll just okay. So if this is a weak demand, then weak supply. After a demand that was in imbalance of demand and supply, then we have a supply, weak demand and weak supply. So if I apply my toolkit to it, what does that mean? If I apply my dashboard, and if I, one second, let me bring it over here. What story does it tell me? We have a supply in control. Then we have demand supply imbalance or a trend change. This is a sideways move. Then trend change would definitely mean either upwards or downwards. Then we have supply is greater than demand, then weak demand, and then weak supply. Wherein this weak supply has eaten all the demand or all the orders of buying orders. So this is a place to place your bet. If not, at least you will not be a buyer at this point if you're reading it carefully, because you know what is happening. This was eventually a supply, then a trend change. This was not a buying opportunity. This was, at least you will not buy this particular point. So buy, if you are not getting into a trade, that means you're also saving money, and you are riding the exact trend or exact market direction. So what happened after that? Now I'm getting into bar by bar analysis that I don't want, because uh, uh, that is, I will not get into bar by bar analysis, because now, for example, okay, we have S, this is a widespread bar, but natural volume would be greater because spread is greater. Then we have no effort bar. That means either there would be a trend change or price continuation towards the downside. We had a trend change. This is a V correction, V-shaped correction. Then this was supply, or supply was greater than demand. Then we had, like this is demand greater than supply. So whatever supply was evident or present at this particular, in this particular price zone, was eaten away by this one. That was signified by this particular bar, because yellow bars are the no effort bars, which says either there would be a trend change or price continuation. So here it acted as a trend changing situation, and here it acted as a price continuation. Then we had demand in control, then supply in control. So whenever this kind of situation occurs, it retracts me a lot, because this gives me an opportunity. If if this is the area where exactly price, like demand and supply, are struggling to find its direction, either out of either out of two, anyone would be succeeding. Either demand would take control and price would go upwards, or the supply would take control and price will go downwards. So now, as we have started, there was a zone over here. As soon as we have broken, the zone vanished. So this is how you would use it. You can use it with ICT. So now I'll stop my this recording, and I'll upload other indicators and application of Wyckoff trade reading toolkit version 109 with smart money and other indicators. So if you have any doubt, you can ask me in comments, or join the Telegram and other. You have the contacts. You can text me or DM me.